Hello?
Yes.
Yeah, we'll start first.
Okay. So, sir, on behalf of Antique Stock Broking, we welcome you all to the third quarter earnings call of Canara Bank. From the management side, we have Shri L.V. Prabhakar, MD and CEO, Shri Debashish Mukherjee, ED, Ms. A. Manimekhalai, ED, Shri K. Satyanarayana Raju, ED, Shri Brij Mohan Sharma, ED, and other team members. Without much ado, I would hand over the call to Mr. Prabhakar for the opening remarks, post which we will open the floor for Q&A. Over to you, sir.
Thank you very much. And I sincerely thank my investors for the support they have given and the confidence they have imposed on us, because of which we could deliver good results. Let me talk about the net profit. 1,502 crores, which is about 115% YOY. But we are not happy with the net profit of 1,502. Our philosophy is to see that the balance sheet is very strong and the balance sheet is future ready. In that direction, what we did is, in the current quarter, that is Q3 FY22, 1,355 crores, we have made a special provision for the pension of the staff, which otherwise, as per the permission of the RBI, can be done in 5 years. But we don't want to wait for 5 years to make the provision, and we have uploaded, front-ended, total 1,355 crores. And the second point is, last quarter, you are all very aware, there was a big NPA account stray, because of which the NPA figure has increased. And last quarter, we did 50% provision for that stray account, where the outstanding is about 3,100 plus. This quarter, what we did is, instead of 50%, we have increased the provision to 75%. That is about 2,400 plus crores. We parked as provision for against a stray account to take care about the future losses. And if future recoveries are there, we will be plowing back the provisions. So along with net profit, I would like to emphasize about the provision made for the pension and also the extra provision made for the stray account, which is one of the bigger accounts. This time, Canara Bank has focused on growth in business, both the liability side and also asset side. Gross advances has grown by 9.28%, and now we are at a 7.3 trillion loan book. Apart from this, retail, we have grown at 10.02%, housing 14.82%, and agriculture 12%, corporate 10%. So put together, the gross advances globally it has grown by 9.28%, and we are targeting to achieve 2-digit growth under gross advances going forward. Apart from asset side, we are also very conscious about the liability side of the book. CASA continues to be our focus area, and we have grown at 10.28%. Now the absolute terms it is about 3.42 trillion, and bulk deposits we have reduced, and there is a normal growth of about 7%. Regarding the asset quality, we have improved the underwriting standards, and also we have increased the emphasis, and the total staff energies are being diverted towards the recovery in return of accounts also. Because of which, as we have committed in the last 3-4 quarters, that our recoveries will be more than slippages, we could get that situation during the current quarter also by recovering about 2,784 crores as cash recovery and about 1,100 crores as upgradation. And the percentages, gross NPA from 8.42 it has come down to 7.80. Net NPA has come down to 2.86. Going forward, we are very conscious about these two ratios, and we are committed to improve these ratios in Q4 FY22. Along with NPAs, we want to see that provision coverage ratio also increases. Now we are at 83.26%, and we are of the view that we have to achieve 84%. Then capital. With all your support, this financial year, we have raised 2,500 crores QIP successfully, and also 81 bonds, and also Tier 2 bonds, and at a very competitive rate. And today, our CRAR is at 14.80, an increase by 111 basis points YOY. CET1, it also increased by 135 basis points to 10.12%. And operating profit, we are at 5,803 crores, showing a growth of 10.16%. And the operating profit for the 3 quarters is taken, it is growing at more than 16%. Global business, we crossed 17.7 trillion. And in the last 1 year, we have added a domestic business of about 1.17 trillion. Current deposits continues to grow, and savings bank also continues to grow. This time we have concentrated on SMA1, SMA2, and SMA0 of those accounts where the outstanding balance is more than 5 crores. And because of the focused attention, as on 31st December 2021, the SMA2 amount is only 2,400 crores, which is 0.28%. And SMA1 is only 3,400 crores, which is 0.39%. Put together, SMA1, SMA2, it is only 0.67%. And even put together SMA0 also, it is only 1.76%. We could maintain very good recovery percentages under retail also. Retail, the NPA percentage is 1.30. Housing, the percentage is 0.90. And in vehicle, education and personal loans, it is less than 2%. And we target to continue to have the NPA ratios under retail at this level only. Regarding agriculture, again our NPA is only 5+%, which is again a very good sign. So with the overall increase in OP, NP, growth in credit, growth in deposits, and reduction in SMA, and also increasing the capital, we could make Canara Bank balance sheet ready for the future. Thank you very much.
Thank you, sir. We'll open the floor for Q&A now. Anyone who wishes to ask a question may do so by pressing the raise hand button on the app. We'll wait for a moment while the question queue assembles. Our first question from the line of Maruk.
Yeah, please.
Yes, hello, sir. Hi.
Hello, ma'am. Please.
So a couple of questions. Firstly, there's a lot of lending that has happened to NBFCs during the quarter. So what kind of NBFCs are these? Because that's the key growth driver, correct? So what kind of NBFCs are these?
I cannot say it is the only driver. It is one of the drivers. And as far as NBFC is there, in the slide we have given the rating of the NBFCs. 98% of the NBFCs today, they are A and above. At the same time, we are getting good yields from them, along with taking care about the future risk aspects. Yes, ma'am.
So, sir, my other question, follow-up is that, but what kind of, like, is it a power finance NBFC? Is it other private NBFCs? That's what I meant, whether it's PSU or it's private.
Right. So along with these NBFCs, let me bring to your notice the credit growth that has happened in other parameters also. For example, as I said, retail you have seen 10% growth, housing 14% growth, agriculture 12% growth, corporate also 10%, out of which NBFC is a component. Now, last time I have said that we are very aggressive in sanctioning HAM projects under infrastructure. Why I'm telling HAM projects is, under HAM projects, most of the risk is being taken over by the NHAI. And there are milestones. After completion of those only, bank will be disbursing the amount. So safety is good. And the second strategy is Canara Bank with a huge equity and also with the talent available to assess the infrastructure projects at head office level. We have financed big ticket HAM projects. For example, previously, banks used to sanction 300 crores, 400 crores, where the debt requirement is about 700 crores. Today, Canara Bank is in a position to underwrite total 700 crores, which in turn is giving Canara Bank bargaining power in terms of interest rate and also in terms of processing charges. Because of which, you can observe the yield on advances has gone up. Apart from infrastructure projects, we have given for public sector undertaking NBFCs also on a calculated basis. So it is a mixture of these things, but all the NBFCs are A and above.
Got it, sir. Sir, and my other
Thank
question is on asset quality.
Please.
Thanks. Sir, the first question is that was there any reversal of provisions related to Air India this quarter? And will there be some more in the next quarter? And then on future retail, I mean, it would be part of the restructured book and it's probably not performing as the restructuring terms, correct?
Ma'am, Canara Bank was having exposure to Air India to the extent of only 200 crores. And total 200 crores we have recovered.
Got it, sir. Sir, and in terms of future?
Future, yes. As you see, Canara Bank PCR is more than 83%. Whatever recoveries are going to happen, along with the recoveries, there will be significant amount of provisions that will be written back. That is why I said, we are making our balance sheet future ready. Future group, yes, we have exposure, but it is not going to be NPA in the coming quarter because we have exposure to only one part, not to the other part.
Okay, sir. Thank you.
Thank you.
Thanks a lot.
Thank you, Maruk. We have our next question from the line of Suraj Das. Yes, Suraj, you can go ahead.
Mr. Suraj.
Hello. Yes, sir.
unable-
Sorry, sir. I guess there was,
Now it's
yeah,
clear.
there was some
Please.
issue on the unmute. So, sir, my question is on this asset quality again. So, can you, sir, bifurcate what is the slippages breakup for this quarter? I mean, segment-wise, like in agri, corporate, retail, and MSME. Because, as you said, there has been some pickup in growth in infra, steel, textile, and all that. So, if you could bifurcate the slippages breakup segment-wise, that is my first question.
Right. Second.
Sir, my second question is on the restructuring. So while you have given a slide on, restructuring, which consists of COVID 1.0 and COVID 2.0. But also, sir, you have one MSME restructuring pertaining to the earlier scheme. So I just want to know what is the total restructured amount which includes COVID 1.0, 2.0, earlier MSME and all other previous restructuring. So what will be the total amount?
Correct. Now let me talk about the fresh slippages, about 2,699 crores. In this, it consists of about 400 crores, one or two big accounts, and the remaining is agriculture, retail, and MSME. And if you bifurcate about 2,200 crores under these three categories, it will be coming about 600 to 700 crores, 500 crores in these three sectors. And regarding that 593 which is there, it is existing NPAs, including big accounts also, where the non-fund limits have been devolved. So that we have paid. So basically 2,699 consists of about 400 crores of one or two big accounts, not even big accounts because it's less than 400 crores. And 2,100 crores relates to agriculture, MSME and retail proportionately. Maybe 5% this side or that side. That's all. And regarding the restructured, RBI has said that there is a restructuring package 1. In that we have clearly given that 5,000 crores which is restructured. Restructured package 2. The RBI has said that you have to give the restructuring package under resolution 2 number and amount. So we have given the number as 3 lakhs, amount as 14,198. But the beauty of this restructuring in Canara Bank is because of the continuous follow-up and hand-holding and timely the benefit was given to our customers, because of which 74.34% of these people who have availed the resolution process have paid back the amount. And for your question regarding MSME, which is other category, it is about 3,200 crores, which is freezed long ago.
Okay, sir. So if I have to arrive at the total restructuring, that would be this 5,000 crore of COVID 1.0, then this 14,000 crore of COVID 2.0.
Because that figure is on that date. Now the figure has gone down because there is recovery, there are closure of accounts. So, and some extent about 1 to 2% have been slipped into NPA also. That is hardly 150 crores, 160 crores. That is less than 200 crores. So if you remove this again, the figure will come to about 20,000 crores or 21,000 crores, not more than that. 20,258, precisely. And okay, going forward, by next quarter, this figure will still come down, maybe by 2,000 crores to 18,000 crores.
Right, understood, sir. And sir, what will be the provision on this restructured pool, sir?
10%.
Okay. And do we have any other provision outside this, restructured pool over and above the PCR? Any other contingent provision or COVID provision?
The provision which is not included in the PCR, there are three things. One is provision for standard assets. Another one is provision for RP. And the third one is, as you said, the provision which we do in a specific cases.
Okay. Sir, what would be the standard provision, as on date, rough ballpark figure?
All these three things put together, other than PCR, it is about 6,000 crores.
Okay, sir. Thank you so much, sir. Yeah, that's
Thank you, sir. Thank you.
Thank you, Suraj. We have our next question from the line of Mona Khetan. Mona, you can ask.
Hello, am I audible?
Please go ahead.
Yeah, thank you, sir. Good evening and congratulations on a good set of numbers.
Thank you,
firstly, on this, so we have seen rationalization of employee expenses in FY22. So how do we look at employee expenses going forward? Could this rationalization continue or we should see growth from here on in terms of the total employee expenses?
Ma'am, if you see in the last 2 years after amalgamation,
You're right.
most of the senior people have retired. And recruitment, we are a bit cautious and selectively we are recruiting the technical people. That is directly reflecting in the staff cost, which is coming down quarter on quarter. And after amalgamation, Canara Bank has changed its strategy of doing business by bringing in a hybrid vertical types, which has boosted the business and the available staff were properly deployed. Simultaneously, the digital transactions are increasing in Canara Bank at a very greater speed. In the last 3 quarters, about 256 crore transactions have happened through digitally. This has an impact on my staff strength. With the existing staff strength also, going forward, I can do business with the help of digitalization and also verticalization. So this will be our plan now.
Okay, so probably in FY23 also, the growth in employee expenses should be pretty contained. Is that a fair understanding?
Need-based recruitment we will be doing. I can tell that. Need-based recruitment. Just like normal procedure as public sector banks used to do, we have to recruit every year. That policy we have changed. We now work on scientific lines, requirement of the staff, proper deployment of the staff, proper accountability of the staff, and then proper rewarding of the staff. These things we brought in the last 2 years, which has given us good results, and employee participation and involvement has increased a lot.
Sure. Thank you.
Thank
The
you.
other question is, if you look at slide 21, there is a write back in other provisions of 400 crore. What exactly is it pertaining to?
Yes. My CFO, Mr. Ramchandra, is there. Ramchandra, please explain.
This time we have made a one-time provision towards the family pension of 1,355 crores. Last year, when we are preparing the research, we made an ad hoc provision for the family pension to the extent of 400 crores. The same 400 crores is reversed this time. So that is why there is a reversal.
Okay. But this family provision should come in other OPEX. I was talking about the provision line item outside of the operating profits.
Yeah, correct. Family provision we have taken as an extraordinary item. Last quarter, the provision made towards the family pension included in under the provision head, below line, other provision. That 400 crores, since we have made as an extraordinary item, this 400 crores we have reversed.
Sure, got it. And also, if I look at your corporate GNPA, sequentially there is a decline of 1,000 crore in the GNPA quantum. So what has helped this decline this quarter?
Ma'am, if you see our recovery under NCLT accounts, this quarter we got about 333 crores of recovery in bigger accounts from NCLT, and also in other bigger accounts, because in terms of putting pressure on them and taking legal actions, we could recover good amount in big corporate accounts also, because of which the percentage has gone down. And second point is because the outstanding of the corporate credit has gone up, that also helped in reducing the percentage of NPA as far as the corporate is concerned. It is a double effect.
Mm-hmm. And on the ECLGS book, what is your outstanding quantum, and have we seen any delinquencies from the book so far?
Ma'am, it is about 16,500 crores. Number of accounts is about it is about 5,70,000 crores. 70,000 accounts, 5,70,000 accounts. Generally, we treat 1%, 2% will be slippages will be there, and immediately we will be taking action on those things. So it is a continuous process. 2%, 1% will be slipping, and accordingly action will be taken. And this amount is included in our current slippages of 2,699.
Okay. Okay, got it. And finally, what share of your loans is repo linked, and similarly on the liability side, if there is anything that is linked to repo or external benchmark?
Liability side, no, ma'am. Asset side, yes. We have a book of about roughly maybe around 30 to 40,000 crores.
Okay, thank you so much, sir. That was helpful.
Thank you, ma'am.
Thank you, Moha. We have our next question from the line of Jay Mundra. Jay, you can ask. Jay, we cannot hear you. Jay, you're there? I think we move on to our next question meanwhile. We have a next question from the line of Rishikesh. Rishikesh, you can ask.
Hello, am I audible?
Yeah, you are audible. Please, Rishikesh, Mr. Rishikesh.
Great. Okay, so my first question is regarding a broad outlook on the other income. So would it be fair to say, that other income now more or less will be in the similar range?
Other income, it will be growing in the coming quarter also. Whereas trading income, we presume that it will be at this level only. It will not increase. Fee-based income also we are going to increase. So put together, I think we are expecting to compensate the loss in the trading income through recovery in return of accounts, through income from other sources, and also through interest income. So finally, when we see, there will not be any impact whatever treasury is not giving to the Canara Bank.
Okay, got it. And my second question is, if I see previously you had guided for somewhere around lower than 2% credit cost, and recently just now you mentioned that there will be, many provision write-backs and significant recoveries. So do you think this is a very conservative estimate, like net of the whatever write-backs we have? So don't you think the provisions can be even lesser than 2%? Maybe would it be fair to assume, around 1.5%, like similar to 10K crores provision that we have guided this year? We may see that next year too, like even lesser than that.
As I said, our philosophy is to provide more and more provisioning so that the balance sheet will be ready for the future. That is why we are projecting that it will be around 2%. But in real sense, it may not be 2%, it will be less than that.
Okay, so around 10 to 11, K for next 1 or 2 years. Is it a fair assumption?
I think I will be in a position to reply after March results.
No problem, sir, no problem. Okay, that's it from my side. Thank you very much.
Thank you, sir.
Thank you, Rishikesh. We have our next question from the line of Dikshit Doshi. Dikshit, you can ask.
Yeah, my questions have been answered. Thanks.
Thank you, sir.
Thank you. We have our next question from the line of Bharat Jain. Bharat?
Yeah, a very good evening. Thank you.
Good evening, Mr. Bharat.
Yeah, thanks for the opportunity and congratulations for a good performance. I have a few simple questions like what are our focus on digitalization of banking transactions do we have any focused approach that 50% or X percentage of our transactions should be digital? So that is something there.
Sir, I request my executive director in charge of digital transactions Sri Raju sir to kindly respond.
Good evening, Jain sir.
Very good evening.
We are very much focused on digital transactions. Last year, actually, our digital transactions for the same quarter, December quarter, it was around 156 crores. But whereas in the December quarter, after 1 year, the per quarter, the digital transactions or e-transactions have increased to 246 crores. That means almost a 65% of growth in 1 year. This we could achieve it because of our focused attention on various parameters. That is the reason one is we are very much aggressively marketing and making our product customer friendly in the mobile app. That's why we could enroll almost 4 million people in the last 1 year. In the debit card also, we have made it almost 8 million people. We have extended the debit card. And in the UPI, we have already touching the 2 crore enrollments in that UPI enrollments. That also last 1 year, we made it almost 80 to 90 lakhs fresh enrollments. And in addition to that, we are encouraging semi-urban and rural and urban areas to do the transactions through Beam QR code. That code in public sector banks, we are the actually pioneer, we can say that now at this moment. So we are actively participating, we are actively canvassing, because from the PM Sanvidhi trader to middle class traders who are all doing the transactions now, they are all been extended almost. We did 8,80,000 QR codes have been distributed, and we are very much aggressive on that. And actually the total, if you look at the branch walk-ins as well as the digital transactions comparisons, last March our branch walk-ins for cash withdrawals is around 12%. But whereas in first 9 months, that has come down drastically to 7.75%, and our digital transactions have increased to 91% to 92%. And we want to continue further in the same direction, and we are initiating more and more digital platforms, and we are introducing even digital lending end-to-end straight through process from 1st April onwards. And many more we are coming in that, with new features.
Okay. So do we have any statistics like what is the percentage of transactions which are happening through digital mode? If we say total out of 100, how many are getting digital?
That's what I told you, I already shared with you that the branch transactions have been, now it is a single digit. Okay. More than 90% transactions are doing through e-transactions, digital transactions.
That is great, sir. Thank you. And sir, another question is like, as we have seen a successful merger with Syndicate Bank, what is the expectation that number of branches would come down in the coming year, the existing branches, and any also plans to reach new locations?
Yes, sir. Actually, the last time when it has amalgamated, it was around 10,500 branches were there together. This year, we could, last year 150 branches, and this year almost 750 branches. We have identified and already completed the exercise for closure. Wherever we find it that it is well within the 200-300 meters, we have 2 branches. Those branches have been identified based on the pin codes and all. That exercise has been completed. And in future also, wherever it is the possibility is there, because we are, it's not that we are closing down the branches only, but we are converting many of those branches into a specialized branch. Almost 60 mid-corporate branches, 33 large corporate branches. There are SME Sulubs are there, 106. There are 243 REHs are there. There are special special focused branches we are opening. We will continue to open in like that special branches also. But it's not that we are not opening the new branches. Wherever potential is there, definitely we are open for the opening of the new branches, but our closure of the branches will continue in the next year also, based on the duplication of the work. To minimize the overheads, we are working on that.
Okay. To be more precise about the figures, December 20, we were having 9,870 branches. December 21, it has come down to 9,007 branches. That is about 863 branches are closed. Simultaneously, December 20, we were having special branches of 621. Now that number has increased to 766. That is about 140 branches have increased. which are specialized branches which give lot of credit to the bank.
Okay.
The net effect, we can say, more than 750 branches we have closed, and those costs will be reflected in the coming quarters, which we are saving because of closing unviable branches.
Okay,
Thank
great,
you,
sir. Yeah, thanks, sir. One more question, like any updates on the NARC which is being set up?
Sir, it is on track, and I think some light we may be seeing by March of this year.
Okay. Would any percentage of NPS would get affected post creation of this?
We have identified 4,000 crores, which as and when time comes, we will be transferring. It is only 4,000 crores.
Okay. And finally,
Mr.
last
Bharat, can you move?
yeah, finally, last
you-
question, sir. Last
Please,
question.
please.
Yeah. By when do we see Canara Bank as the number 2 PSU, and do we look forward to a 10,000 crore of bottom line in the coming year?
Sir, let me tell you, this is a strong wish of my staff. So when staff, they themselves have this wish, I think things will become easier. This much I can tell.
We also, as an investor, have this wish.
Yes, sir. Your blessings are required.
Okay. Thanks.
Thank you.
Thank you, Mr. Bharat. We have our next question from line of Anand Dama. Anand?
Yeah, thank you for the opportunity, sir. This quarter, we have seen very strong growth on the corporate front, and within which basically we also had seen very strong growth in the NBFC book. So anything that you can comment about where have we grown in the corporate side, whether these are short-term loans or these are more of long-term loans that we have given, and what kind of yields are we making on these?
As I said, we are very aggressive in infrastructure HAM projects. That is one thing under corporate. Second one is in industries also, we have started underwriting the projects. And third one is under health sector also, we have underwritten most of the projects. And the type of loans, they are basically term loans. And second point is in corporate advances, now we have changed our strategy. Previously, Canara Bank in a consortium used to have 5%, 3% or 7%. Now we don't want 3%. Minimum we want 10% in all the good accounts. So we have shifted our way of thinking, and whenever the proposal comes, corporate, which are A-rated and above, we are demanding 10% share in the working capital, which ultimately increases my CASA also. So because of that strategy in corporate, this time we have shown a good growth. However, under retail and agriculture, in the last 6-7 quarters, we continue to show good growth, which is under double digits. This time under MSME, even though YOY growth is 1.29, quarter on quarter we have increased by 4% by catching hold of good MSME borrowers. So growth, I can say it is widespread. And under retail, out of 1,23,000, 70,700 is housing loan backed by collaterals and mortgages. And there we are seeing 14.8% growth, which is again possible with the involvement of each and every staff member under verticals, where accountability is there, appreciation is there, and reward is also there. So growth is widespread. We continue to do this. And RAM sector, we maintain a percentage of 56%. Corporate, we maintain a percentage of 44%. That overall guidelines we will be managing because we don't want to increase too much under corporate also. So this ratio of 56-44 or 55-45, this we will continue in the future also. Thank you, sir.
So within the NBFCs, where have we lent basically? These are the microfinance, HFCs, or the
microfinance doesn't come under NBFC. For our calculation, microfinance we show it as a separate one. And microfinance we have sanctioned about 2,200 crores and disbursed about 1,700 crores, which is guaranteed by the central government.
So what is there in
And
this NBFC book which has grown in this quarter?
NBFC book, we have grown in all the NBFCs which are AA rated and above.
Okay, and those are PSUs as well as private, is it?
Yes. But all the growth is as per the terms and conditions of Canara Bank. Because of which you can see fee-based income, we could garner about 1,421 crores. And interest income is also increasing drastically. So since Canara Bank, as you said, is going to be a market player in the future, we are ready to underwrite big ticket loans at win-win situation, not at the benefit of the borrower. It should be at the benefit of the bank also. And now we are sufficiently in a position to dictate the terms in the market. And where the customers are very happy, the way in which we give the credit within 7 days, at the most within 10 days if the ticket size is about 1,000 crores. So this is there in the market, and we say yes or no.
Sure, sir. And sir, secondly was the Air India exposure that we had on our books. So any provision reversal we have done during the quarter?
Sir, in Air India, hardly we had an exposure of 200 crores.
Okay.
And the 200 crores they have paid and they have closed the account. We are not having exposure to either Air India or Kingfisher. Canara Bank has not taken.
Sure, sir.
I'm request you to rejoin the queue. We have long.
Yeah, sure. I'm done. Yeah.
Thank you.
Thank you. I have the next question from line of Mr. Ashok Ajmera. You can go ahead.
Thank you for giving me this opportunity. And congratulations.
Yes, very good afternoon.
Yes, sir. I was waiting
Thank
for
you.
my number to come. Congratulations, sir, for yet another quarter of good set of numbers and business crossing.
Sir, we lost you.
Over 17 lakh crores, 17.70.
Sir.
And I think very soon you will be next to State Bank of India the way you are going. And it's very encouraging to know that, you have started very big ticket size loan, taking stand alone, approach towards large loans. Sir, I have got some couple of observations and some queries. Number one is that in Shrey, we are left with about, I think, 775 crore more.
Correct.
To be provided. I think the balance provision.
Correct.
Are we planning it in the coming quarter, this current quarter only now, January to March?
Sir, I cannot give specific answer, but I will give Canara Bank wants to be future ready and strengthen the balance sheet. This I can tell.
No, thanks for that. And sir, this SMA 0, what is it is about, I think, 15,000 odd crore SMA 0. So what is the experience now since 1 month has gone? What according to you, something might, finally become SMA 2 out of this 15,236 some odd crores?
Sir, SMA 0 is 9,000 crores, not 14,000 crores, sir.
Oh, sorry.
It includes SMA 1
Okay.
and SMA 2 also.
Yeah. Correct.
SMA 0 during COVID time, it is a common thing that they will be paying with a delay of 2 to 3 days.
Okay.
And as on date, we are very comfortable as far as SMA 1, SMA 2 and SMA 0 is concerned. And we are hopeful that we will be managing at this level going forward. Because I don't see any stress in any of my corporate accounts where 5 crores and above is there. Even if it is there, I have 2 months time. I can solve it if any account slips.
Great to know that. Sir, now a bank like ours, there are two things which the bank has some negative legacy. One is that CASA. Our CASA is, though it is growing, but it is still under, the normal, 40-42% or 45%. One bank is having 55%. So some special approach is being adopted for that. And secondly, even the gross NPA, the percentage terms, generally every bank would prefer it to be less than 5% gross and less than 1.5% net. So ours is 7.8%. And with this NARCL, 4,000 crore going away, I think it will make about some 0.5% or 0.25% difference in this. So any other approach to reduce the gross NPA numbers in terms of at least percentage?
Sir, two questions. One is regarding the reduction in the percentages.
Yeah.
And if you see in the last 8 quarters, except one quarter when RBI has given the dispensation moratorium, otherwise quarter on quarter, we are reducing the NPA percentage in terms of amount and also in terms of percentages. Same thing we are continuing with net NPA also, amount wise and percentage wise. And this trend will be continued going forward. And our wish is, and our efforts towards that is, we want to have one of the best percentages in the industry as far as gross and net is concerned, which we feel we can achieve that. Regarding CASA, when Canara Bank 2 years ago, the CASA percentage was 30%. From 30%, we started growing, and now we have come to 34 plus percentage. And in absolute terms, if you see the CASA amount, even in 1 year, it has grown by 32,000 crores.
Yeah, no, that
and
is
growing 32,000 crores because if you recollect 2 years ago, our provision coverage ratio was 70.
Yeah.
Today it is 83.
Yes.
At that time, our NPS are on a higher side. And before 2 years, earlier 4 years, every year Syndicate Bank and Canara Bank used to make losses. In the last 8 quarters, the trend is changed and there is a continuous growth. For example, June 20, the net profit what Canara Bank shown was 406 crores. Next quarter, it has increased to 444 crores. Next quarter, it has increased to 696 crores. Next quarter, it has increased to 1010 crores. Next quarter, it is 1133 crores. Now it is 1502 crores.
500. Yes.
If you see the graph, we don't want to go back. We want to go forward only. That is the spirit with which we are working in Canara Bank, so that all my investors will make justice to them. Thank you, sir.
And sir, there is a pressure on the treasury. One last question. Okay, I will shift my question to another question. Sir, NBFC, you have got a very good exposure. And still, I think you are comfortable for good NBFC A plus rated. Sir, what are your views on the real estate? Because now the overall business, real estate is being re-rated by most of the other banks. And this particular sector also has started doing very well, especially in last about 9 months to 1 year. But still, I feel that our bank still has some reservation on even some good real estate projects also, sir. So what are your views and policy on this, sir?
Sir, our policy is, since the last 4-5 years, when the experience was bad, when RERA was not in full force, it was cautious approach. Now RERA has stabilized. And even underwriting standards have increased in the big public sector banks like Canara Bank. Apart from that, to fall back in real estate, we take some comfort from the promoter. That is point number 1. Second one is to have 15 to 16% housing loan growth. I have to sanction real estate projects, especially real estate housing projects. It is interlinked. Once I sanction real estate housing projects, I will have first right of refusal where I can finance housing loan and I can close my real estate loan. So now we are cautiously aggressive in sanctioning real estate projects and we are sanctioning.
Okay, sir. No, thank you. On the treasury front, there is some pressure, sir, on the income now because of the hardening of the interest rate and the signals and message. So how are we going to, planning to offset? Because treasury all along has given, except this quarter, of course, it was still under pressure. What do you see in future? One is that trading income and other one is the investment returns from the treasury where major allocation of the asset is there, sir.
Correct. Let me talk about the existing figures. With an average loan book of about 7 trillion, I can calculate at a yield of about 7.23 or 7.25 the amount of interest income that I going to earn, which will be very significant. And we are projecting a growth of 10% plus as far as credit is concerned. Since we have already achieved 9.28, our next step is 10%. We are confident of doing that. With this, whatever loss I incur in the sale of securities by the treasury, that I will compensate with interest income. Point number 1. Point number 2, as I said, recovery in return of accounts, we are targeting 1,100 crores. That is going to give me very good income. So business is always dynamic. If one channel reduces the income to the bank should immediately shift to other channels from where they can earn the money. That is a strategy we have adopted, and we are successful, and we continue to be successful. But lot of efforts and lot of research is being put into before we take a policy decision. Thank you, sir.
Thank you, sir. Congratulations.
Thank you, sir. Request you to join back in the queue, please. We have a lot of long. Thank you, sir. Yeah, we have our next question from line of Mr. Aditya Singhania. Aditya, go ahead.
Thank you. Congratulations, sir, for excellent results.
Thank you, Mr. Singhania. Thank you very much.
So I had two questions. Both are somewhat accounting questions.
Please.
So one is, so you have made 2,700 crores as provisions for loan loss provisions, and the write-offs are around 1,300 crores, and the outstanding provision coverage has not increased in absolute terms. So I was just curious, where is the balance 1,300 odd crores?
Ramchandra ji, please.
The 2,946 was the provision, total provision. 2,705 crores is towards the NPA provision we have given. See,
yes.
In the total amount, 1,355 crores we have taken it for the one-time family, one-time extraordinary income. So that is why extraordinary expense, family pension. Towards the one-time extraordinary item towards the family pension. So to the extent that the PCR has not gone up. Otherwise, whatever the provision we made towards the loan has taken towards the PCR.
Sorry, so you're saying that 2705 includes the 1,300 crores for pension?
No, it excludes that.
So that's what I'm trying to understand. So that if the loan loss provision was 2,700 crores,
yes.
If there was no write-off, the outstanding provision coverage should have gone up by the same amount, right? The opening was 36,991. If there was no provision, it should have gone up to 39,696. But the closing figure of outstanding provisions is 37,074. Right? That is a difference of 2,622 crores. But you have mentioned write-offs as 1,304 crores. So I'm just trying to understand what is the gap. Where is the balance 1,318 crores?
Sir, the provisions that the write-off is 1,300 crores, what Mr. Ramchandra was telling, that this provision that we have made for that family pension, that has not come as a part of the provision coverage ratio, and that is only making this difference, sir.
But you're saying 2,700 crores does not include the family provisions, right?
Yes. No. It does not include family pension.
So that's
and of course there is a write-off is offset. To the extent we have written off a part of the loan, that is being offset.
So that's what I'm trying to understand, sir, that if if the
We'll come back with the details. I will explain you after.
Sir, our Mujumdar sir will be mailing you in detail.
Okay,
Please.
sir. So so the second question was on the accounting change that you did, where you have mentioned in your notes to accounts that about 400 odd crores, 436 crores was the increase in interest income due to the change in accounting policy. And 342 crores was the increase in gross NPA. So in which head has this been accounted for in gross NPA?
Sir, existing head only it has been adjusted. So,
Debits
sir,
in existing NPAs.
Yeah, exactly. It is existing, sir. What it was, almost all our peer banks was following the process what we have done now. So we have aligned ourselves in line with the industry, which we were not doing so far. So it is for nothing but just to align ourselves with the industry, present industry.
No, I understand that. I'm just trying to understand where this 342 crores has gone in the NPA. Is it debits in existing NPA accounts or is it fresh slippages?
No, sir. These are all existing NPA accounts.
Okay. And
These are all existing accounts.
In the original treatment, your income would have been lower by 436 and your outstanding gross NPA would have been lower by 342.
And provision also, corresponding provision also.
And
Because
what would be the balance? What would be the balance? 90 odd crores, sir?
Sir, there is no. This is 436 is the interest. This another because some are charges are there. Apart from interest, there are charges. So the charges it has gone into the charges other than interest.
Right. All right, sir. Thank you so much.
Thank you, sir.
Thank you, Aditya. We have the next question from line of Jay. Indra, Jay.
Yeah, hi. Am I audible now, sir?
Yeah, please. Jay, you are clearly audible. Please.
Yeah, great, sir. Congratulations on good quarter, sir. I have few questions. One is on capital, right? So you have shown that CET1 has increased in absolute amount by 17 or 1800 crores. Does this include PAT for this quarter?
Yeah, it includes PAT for the quarterly profits.
Sure. And there looks so the increase is slightly higher than PAT. I mean, PAT is like 1500 crores and the QOQ increase looks like 1800 crore. So is it also the DTA unwinding which is also happening here?
DTA unwinding.
Yeah, it is a small amount. Yeah. Yeah.
Sir, that DTA unwinding is a very small amount, insignificant amount this time, around 100-150 crores.
Okay, sure. And second, sir, do we have any erstwhile SDR or 525 cases also, which are standard?
Very negligible. It is very negligible. Okay.
We have about 4 or 5 accounts which are still there. So that investment part is still continuing, although now some other restructurings have been done.
Okay, understood. And just on NBFC, sir, if I look at this number, like over 1 lakh crore, so on as a percentage of loan, this is now 14.5%. So NBFC as a segment, and even if you are not including MFI, this is like 14.5% of gross loans. So is there any internal threshold? I mean, what is the internal threshold that beyond which you would not be, growing this segment as a percentage of total loan book?
Our internal threshold is when we take exposure to AA and AAA, there is liberty to take it. Less than that, already we have a threshold not to take.
No, as a sectoral cap also, sir. So you, NBFC, even if it is a AAA, you would have some sectoral cap also, right?
Internally, we are permitted to go up to 16%.
Okay. Understood, sir. And the last question, sir, from my side is in ECLGS, right? If I look at this quarter ECLGS number and if I compare that with last quarter ECLGS number, it looks like 5,000 plus increase in third quarter. So is that number right, or what has happened in ECLGS in this quarter? Why there is sudden spike?
This is as per the new norms that has come up, ECLGS 2. Under that we have given 5,000 is the correct number that we have given.
Okay, so you have topped up ECLGS 1.0 with additional 10%.
That was, yes, exactly. That was, 10%, 20%. So now it has gone up to 40% in certain cases. So we have done that.
Right. Understood. And sorry, if I may ask, sir, on your slide 45, which gives some guidance, I mean, it looks like you have not revised, despite having, let us say, GNPA is now lower than your guided range for March 22, you are already below that. So do we just go back to, I mean,
this guidance is when we have given at the beginning of the financial year, and some modifications were there subsequently. But our philosophy is this will be the minimum, and we will be doing more than this what we are giving the guidance. It cannot fall below this guidance.
Right. No, just to understand, sir, this gross NPA number, I mean, as of now, it looks like, it will increase because your actual is 7.8 and you have, reported 7.9 as your sort of.
Yeah. In the beginning, in my opening remarks, I said, our endeavor will be whatever percentages we are having as on 31st December 2021, as on 31st March, it will be better. So gross NPA 7.8, we don't expect it will grow. Rather, we expect that it will come down. However, the guidance which we have given earlier, we don't want to change it so that we will be knowing what guidance we have given and what we have achieved. And it will be very attractive.
Understood, sir. Thank you so much, sir, and all the best.
Thank you, sir.
Thank you, Jay. Due to time constraints, the last question.
No, we'll close it.
Yeah. So before I hand over the call to Mr. Prabhakar sir for closing remarks, thank you, Prabhakar sir, and the entire Canara Bank team for giving Antique the opportunity to host you. We look forward to the same in the future as well. Over to you, Prabhakar sir, for your closing remarks.
Sir, if the COVID situation improves, next time we will have the investors meet in person. Maybe in Mumbai, maybe in Delhi, or maybe in Bengaluru, as per the convenience of the investors. So that is one wish which we have, to interact personally with our investors and to see them and let them also see us, how we are running this bank. And I think I should thank all the investors for the support they are giving, because of which quarter on quarter we are giving results which are more than the market expectations. And our wish is to continue this. Thank you, sir.
Thank you, everyone, for logging in. Goodbye. Have a good evening. Thank you.
Thank you.